Hey, good morning. We need to send Obama back to Saudi Arabia more often. Check out the move in crude. Unbelievable. It has just been ripping lately. Great, great moves. And we filled this gap area in very nicely. We tested the upper boundary, came back to test the lower boundary, and then we have taken off since then. So I would expect coming into today's session that we're going to come back, check our area here. Price always comes back to check the previous level. And then I will try to get a trade off of my volatility bands. As you see, price comes back, checks the previous level. Let me show it to you. So we had a breakout, then it comes back down to the previous level. And then when you get that move out of here, sometimes like this one just went sideways for a while, but as long as you tucked your stop below the pivot, below your volatility band, you're in the trade. And that's your risk. And then of course this is still moving. And let's put some levels on here so you can see where we are. I use VWAP and I use market profile. The volume profile, it's not really the TPO, it's the volume profile. And it helps me identify air pockets of places where price might come back to try to fill in. Previous points of control are often hit if it gets below the current value area. The current previous value area right here, here's 2 days ago. So I use these 25% values as the pivot. And when you see a pivot or a signal inside or on that developing value area, definitely go with that direction. My strategy can get you in and out on these swings, but generally I trade in the direction of the trend. So I'm only looking for entries. They don't all work. This one was a stop out, but the other ones all worked. So more work than the occasional stop out, and your risk is limited because you have a defined doji on the way I set my bar up to tuck that stop. So you can either tuck it right one tick below that doji. If it's going to hold, it's going to hold, as you see. There's no reason to put it 2 ticks below or 3 ticks below or below the volatility band. If that doji is going to hold, that doji is going to hold. Here's an example right here where you can see it just double bottomed right there and kept going. This was a 1 tick stop, so I guess you would just disregard what I said and put a 2 ticker. Or, if the volatility band's right there, just tuck it behind that volatility band. But definitely trade in the direction of your overall volatility and wait for your signals to get back long in the direction of the trend. If you get caught in a sideways market where, well, I wouldn't be trading during this time frame anyway, but it happens a lot during the intraday time period, especially between like 8 and 10 a.m. It can go sideways and then take off. You can either write it out or just exit in the middle. That's a safe, just jump out if you don't want to play that game of up and down. Just jump out of the middle because you never know what's going to happen when you get into this sideways. And crude loves to go sideways in the afternoon. after the trading session, after the run, it'll just go sideways, like right here. I call that sideways. But some great runs, and we're definitely looking for a place as far as how high is this going to go. I have some levels. That was that gap. This is a pivot at 47, the low, the bottom. So I got my line there. And that'll probably cause a bounce. That's on the weekly. And on the daily, well, I guess that's it. If it breaks through that, the next stop is going to be up here. $48.50. Oops. Okay, so I've got my levels on my charts. And there they are. So if I see a red, I see a pivot on one of these levels, I know that the trend is over and I'm expecting a deeper retracement. Otherwise, I'm just going to keep trading up to that 47, especially today. We're sitting at VWAP. So I'd like to see this get down to my test area, and I'll be just sitting here waiting for a green band. And won't I feel like a dummy if it takes off from here and goes up? First green band, though, I'm going. Here is the direction guide. I've got it on generic, meaning this the green color stripes are printing because the algo has got all the conditions being met at this time. If I just want to trade the regular trading hour session, I can change it to my market. This was yesterday. And this is the open outcry. As you can see, we had a down and up day yesterday. And we've just hit R1. So that's why it's probably going to pull back to my area. And then I'll be looking for that 161.8 R2 and my 47 level for today's trading session in crude. So as far as the other markets, the NQ I'm looking at also. And as you can see, the direction guide strategy on the generic is telling me to stay short. If I want the index feature for the open outcry, I'm going to have to wait for that signal because the pit has not opened yet. I might wait for this to come back and tag yesterday close and the VWAP before getting short again. And then definitely look for this yellow line down here as my target on yesterday low. So close to low for a trade plan on the NQ. And again, using this bar is a little bit bouncy. So when you find that the prices are bouncing too much inside, you can lengthen your bar. So that helps a little bit smooth it out. Really choppy in here. That was just a chop fest. But you want to give yourself the opportunity to get into a maximum excursion at an affordable price for your budget. And here's what I'm talking about. So you add the tick trend and the tick reversal. So 4 and 16 is 20. If I put 4 and 20, that's 24. Since these the indexes trade in 4 tick increments for a point. That's better. You see what I'm saying? That gives you the smooth up and down and allows you to sit out some of these on one bar. That's what I'm looking for. That's much better. But this means that it's going to be 24 ticks from top to bottom on that bar if you were going to get a full bar reversal. So for your strategy for this to kick off, my signal point is here. That's going to be more than 24 points. It's probably going to be like, ticks, 24. It's probably going to be like 28 or 30 ticks for the pivot. That's where your stop is going to be. So make sure you can afford that much risk. Otherwise, drop this down to how much risk you can afford, and you'll just have to get used to trading it. Using your tricks like levels, momentum divergence. Here was a good example of a momentum divergence, and then up it went back to the value area, hit the point, come back down. Now it's bouncing back in. So know your levels, know where the market likes to trade to, and then look to take trades off of your areas once price starts moving. Some traders like to take the trade on the line. I'm more of a wait till the signal occurs and then just use that risk and get in the trade. Does not always work out, especially in a market like the NQ, but which is an index. You really have to open up your band more. This is 426, which is a 30 tick, and you can see how it really allows you to open up and stay in a trade much longer. So widen your horizons for a successful trade. Know the direction you want to trade in. Don't get stubborn and refuse to get out of a trade. Sometimes you think that you can pull a trick out of a bag, and the market, if it's moving with a higher time frame participant like a central bank or a Goldman Sachs, they're going to blow through your levels. Our little tricks for our day trading levels, they're just going to blow right through them, and that's what happened to me yesterday in that yen trade. I was holding on way too long in the wrong direction before I could correct myself and got smacked for a little bit of a loss. And I came back and was able to make up more than half of it, but I still ended up with a down day, my first one in 8 sessions, and I don't like those. So especially knowing that I could have made a ton of money if I had been on the right side of that trade. So risk management is key. So I will start using 100% risk management rules I will adopt a rule for myself, for my own personal risk profile, and I will adhere to it religiously. I don't care if I'm going to take a stop out. Stop outs are just part of it. See, I could have dumped that trade yesterday for $34 loss, and I didn't want the $34 loss. $34. And it ended up being, I won't even tell you how big of a loss I took on that because it kept running after that. And I kept thinking, surely it's going to come back, and check the area. And it was on one of these, just, you know, directional path trades. And the risk became so great, I had to call uncle and get out of it. And that's what happens when we get stubborn. So don't get stubborn. Stay smart. Stay with a consistent risk management profile. Don't care that you take a stop out. That's just part of trading. Because clearly, as I'm showing you, once you find a market that's trading the way it should be trading and you have your levels down correctly, you can come in and out of these trades. You know what direction to trade, drop it down to a smaller time frame, and just hit the longs. I mean, right? That's all we can do. And like I said, there was 7 winners and one stop out. Okay, now we know what we're doing. Let's get it done. Trade to our levels and make money. Thank you so much. Y'all have a great day.